Hi everyone, hope you're all doing well. Today I have 4 stock updates for you guys. These stocks all reported earnings this week, and 2 of them I own, which is Celsius and Disney, which I actually don't speak about too much on the YouTube channel, and 2 that I don't own, which I do actually quite like at the right price, which is Palantir and Datadog, and we'll be talking about these 4 stocks and a little bit of an update after their earnings. So hope you enjoyed the video. If you could, hit the like button and let's get started. So Celsius stock is a stock I own. It's been actually a really good pick since I started mentioning this stock back in 2022. Since that time frame, the stock is up around about 409%, which is pretty impressive. And I actually dropped it in the intro of yesterday's video, which was quite funny. I wanted to try and bait a few people out of that intro because, you know, I hardly mentioned any of my winners, which I did in the intro video, and it was funny to see a few people straight away come out in the comment section mentioning those 6 stocks, which they do all the time, like, oh, what about this stock and this stock? And it's like, yep. But I've never seen Celsius once mentioned in the comment section, and it's funny, a few people get baited in by that. And yeah, it was funny watching the few people come out yesterday in the comment section about that. But, you know, it's one of those that Celsius, if someone buys Celsius, yeah, it's my genius idea, and if it's a stock that goes down but I mention it, oh, but that one's your fault, you mentioned that one, it does make me laugh, where it's all these people that seem to somehow have found hymns. I'm sure they would have found it without my YouTube channel anyway. But anyway, getting on to today's video. By the way, on the Patreon, we did an earnings review. So on the Patreon, we do 2 exclusive videos a week. And we did a review of earnings last week, which mentioned Starbucks, InMode, Card Factory, SoFi, PayPal, and Block. So if you do want to see some exclusive content, join through the link in the description and you get 2 exclusive videos a week. But let's talk about Celsius, because it has been a great performer. But yesterday, the stock did drop massive. I think at one point it was down like 12, 13, 14%. I didn't really see the open, but I know it had a massive drop on the open, but the stock or investors really started buying up the dip in Celsius, and it only ended the day really down 1%. So that was a big turnaround from Celsius. Now, when you look at the numbers, the EPS was a really good beat. The EPS, gap EPS as well, beat by 0.08. So that's a really big beat on the EPS side of it. Revenue, not so much. Still good, 36% growth, but this was a miss of 34 million on a 355 million. So that's a really big miss on the revenue point of view. So I straight away was kind of thinking, what's kind of going on here with Celsius? And I mean, look at the improvement of the net margin, by the way, up 89%. So basically, Celsius came out and said what happened is basically last quarter, this time last year, so Q1 2023, obviously the deal was signed with Pepsi. They took a big inventory load in. This year, they didn't take as big of an inventory load in as what we had last year. And also, there was a little bit of a decrease in the inventory levels at Pepsi. So the combination of the higher load last year when the deal was signed, combined with what was a lower inventory take in this quarter, meant that there was a big miss on the revenue. If it wasn't for them, the inventory fluctuations, and if you believe management's comments on the inventory issue and you take that into consideration, the growth would have been 60%, which isn't too bad at all. So yeah, I'm not too worried about this overall. Like I said, I think you look at the growth, this growth is still good. And if you believe management what they're saying about the inventory side of it with Pepsi, then it definitely looks like an absolute crazy dip. And it seems like Wall Street believed them and they bought into the dip here, thinking actually we probably shouldn't have let this stock dip. The main thing I'd be looking at is the profitability. This is now coming a company that you focus on the profitability levels, and the profitability is ramping up absolutely huge on the business. And we have the international expansion that's going to come in as well this year as well, which should be really interesting for the business. What I'll say about this as well is, even if it's a company growing at 36% year over year, and imagine if they didn't have that inventory fluctuations going on, you know, you're paying up 69 times forward earnings for this, and in fact it's probably a little bit lower than that because they're beating EPS by a lot. So it's probably even lower forward P than what's up here right now. And for a company growing at these sort of levels, I still think it's really good. I think Celsius is going to become the #1 energy player, and if anyone did buy that dip on Celsius, I think you did a really good move on buying up that dip, because it's a fantastic business. And I mean, the other option that we haven't even talked about with Celsius is the balance sheet. I mean, when I started buying the stock, the only concern I had was around the balance sheet. They didn't have that much cash, as you can see here. The cash was quite limited. Now, because of the profitability that's ramping up and the cash injection from Pepsi, they sit on around about 755 million in cash, and that a 18 billion market cap, you know, gives them tons of options what they could potentially do to, you know, buy back shares. So yeah, it's the future for Celsius is still positive, and even if this was a longer term issue, which I don't think it will be on the growth side of it. I still think that it's very good here. So yeah, I'm jealous of anyone that did buy the dip on this one. Disney, so Disney had the dip, but theirs did not recover. It basically stayed down for most of the day. And the Disney numbers I thought were okay. I didn't think they were amazing. I didn't think they were bad. On the EPS side of it, there was a beat, the beat by 10 cents. On the revenue, they did miss slightly on the revenue. It wasn't much at all. They did raise their EPS growth for the year. I think the next quarter growth was maybe a little bit lower on the quarter. Maybe that's why they had a little bit of a wobble. But overall, I thought the numbers were okay. I mean, it's 24 times forward earnings, which is, I think, very fairly priced for a company like Disney that's doing the profitability numbers they are, the growth they are, and the moat they have. I don't think it's terribly undervalued. I don't think it's terribly overvalued. And I think the reason why the share price basically just had a correction is they went and looked at the stock, looked at the numbers, and went, you know what? Year to date, we were up over like 26%. Let's just have a bit of a correction here and maybe take a bit of profit off the table. And I think that's what happened. I think that I think a 16% year to date for Disney is still fantastic on the drop. And I think maybe it was just getting a little bit ahead of itself and it needed a cool down. So as a Disney shareholder, I wouldn't really worry too much about it at all. Palantir had the worst day of them all, I think. Let me just double check. What was Datadog down? Yeah, it did. Palantir did have the worst day of them all. It was down 14%. And I've got to say, Palantir's earnings were pretty good. They came in line on the EPS side of it. The revenue grew by 20% year over year, beat by 16 million. They also raised the guidance, as you can see down here. It was a triple beat. This is really, really good numbers from Palantir. The reason why the stock probably sold off, in my opinion, is it's just, once again, very richly valued. I think that when we look at Palantir, I mean, year to date, it's still up 30% on the dip that it was, that it's on in the last year. It's up 178%. I just think it just got a little bit too hot, and I think people looked at the numbers, had a refresh, and went, you know what? For a company that's 70 times, I mean, what's it at the moment? It's 170 times earnings, even on a forward basis. It's 70 times earnings on a forward basis. I mean, 20% growth for a 70 forward times earnings business. I know it could be a really interesting business for the next 5-10 years. Very interesting moat on the business, but I don't know if 70 forward times earnings. I mean, obviously that's with the drop in as well today. Before the drop today, I mean, it probably would have been a lot more than where it is right now. It probably would have been like 85 forward times earnings. So I mean, 85 forward times earnings for a company that's growing 20%. I mean, if you look at Celsius, and I mean, I know there's a bit of difference between the industries that they're in, but with Celsius, you can get, nearly up to double the growth. Well, I mean, if it wasn't for the inventory issues, it would have been triple the growth of Palantir, and the profitabilities even ramping up more on Celsius, and you would pick it up for around about the same forward times earnings. So it shows you the difference in the valuation there. I mean, people argue about the moat on Palantir being better, which I agree with, but I don't think there should be that big of a price difference between it. So yeah, with Palantir, I think the numbers were really good. I think triple beat was absolutely amazing, but I think it's one of those that it just needs a reality check. I think 70 times forward earnings, or like I said, it was 85 times forward earnings for a company growing 20%. I just don't know. I think that it's just a bit of profit taking going on there, which is needed, I think, with Palantir. And I'm sure people that have been in the stock for the last year don't mind that at all, to be fair. They're still sitting up plenty. And the last one was Datadog. I actually really like Datadog because it's a security SaaS platform for cloud applications. And you know me, I really like cybersecurity stocks at the moment. And obviously I had Darktrace, which I've sold out, and I'm really desperate to find a new cybersecurity play. Datadog, I would not mind in the portfolio, but same again, it just comes down to the valuation side of it. With 11% drop though, I had a quick look. I mean, in last year, it's still up 43% year to date. The numbers were good. EPS was a beat by 0.10. Revenue 26% year over year growth, beat by 19 million. And once again, the outlook, I think the outlook was a little. I think they hiked the outlook a little bit up from here. And why is the stock going down? Well, it's kind of priced to perfection. Same again, you're paying 83 times earnings. It is growing a little bit faster than Palantir, but it's still a little bit maybe rich on that side of it. And when it's priced to perfection, any bad news that comes out will rock the share price. And the bad news that came out is that the president said that he was going to step down. So that was the sign for people in Datadog to go, it's a bit of a rich valuation, we're up on our shares, maybe take a bit of profit off the table, and that's what happened here. So overall, if you're a Datadog shareholder, I won't worry about it. I think it's just a bit of profit taking on a stock that's priced pretty fairly. The only time I'd be worried if you've been buying at $130. I think that would be the only time that you're worried about this news. Overall, good numbers. I would watch this stock now, and personally for me, I wouldn't mind owning. Well, if Datadog got to the right valuation, and then I would take a really good, proper deep dive research onto it. From what I know, it is a good business, but I would probably do a bit more deep dive on it just to make sure I'm completely happy with it. But if the stock was to get probably around another maybe 20-30% drop on the share price, that would be something that I would be interested in and have a look into it. And that can happen. I mean, even look, only a year ago, the stock went down 30% there, down to $79. If you gave me Datadog tomorrow at $79, I'd probably start looking in that and be very interested in those levels. So let's see if this drop does cause a little bit of weakness in the share price and maybe an opportunity. But overall, I won't worry about the numbers overall. So 4 quick updates on a few companies that reported earnings there, guys. Hope you enjoyed it. And hit that like button and I'll see you in a bit.